Hello fellow traders, this is Paul Limmel, Big Unit Trading Club. I wanted to do one last video before I head out of town. I'll be gone till March 13th, but saw a really good setup, and this is timely, and heading out of town for a funeral and won't be posting for another week, but I did want to post this one. This is WGS GeneDX Holdings Corporation. Really good pattern quality within cycles. I'll break those down in a second. But first, before we dive in, make sure to smash that like button and subscribe. It really helps us reach more traders like you and keeps you updated on our latest trading tips. This stock has excellent momentum, great pattern quality. It's actually our Deuterium trade because of the strength of the consolidation after a big run. So you can see it coming out of the TM-3 cycle off of the IPO. Again, this is a real common pattern, especially coming off of an IPO for a bottom. And pretty much if you had caught that breakout of the TM-3 about, where did I get 42? Let's see here. Yeah, it's 42 somewhere in this base right here. But if you'd caught it right out of the TM-3, still 3,500%, not shabby at all. So the cycles, as far as the CAT3, we got the first cycle, TM1, 1.5 month cycle. Second cycle, TD9, 50-day cycle, 2.5. And pullback from that was a 1 month cycle, TD6. And then you have the high set. Basically, you're setting up high out of that prior pivot at the 3.5 month cycle. Generally, when you get above 90% on the 3.5 or 5 to 7 month cycle on the TSS set, extremely strong. It's called a Deuterium pattern, and not a lot of these stocks at any given time in the market. Usually like a handful. Anytime you scan the markets, you usually find 5 or 6 really good charts like this, but this is one of them. And been a tough market. For it to stand out like this, that's a really good sign. If you're unfamiliar with any of the trading terms I'm using, you can find our club lingo at bigkundentradingclub.club/lingo. Now here's something additional to like about this, the short-term cycle. This pop right here from that, actually it's a little bit of, well, it's actually about $10 above that $50 psychological price point. What I call that is error. Basically, you have a strong psychological price point and you have distance between the actual price point and the consolidation low. So that's error. I call it error. It means it's strong and probably will continue upwards past the prior pivot high, which it did here. Basically, it's about a 90% gain off of that. And despite that big gain, you got a soft landing pullback through 2 waves. You got wave 1, you got wicks on the bottom. You got wave 2 with the penetrating bar. You got a TD3 cycle. It's a 5 to 7 plus cycle right there. And so once we get outside of this trend line over here, we start looking for targets, but it's acting really well. When you look at a stock like this that had a reverse split and you see a 3,000% gain here, you can't extrapolate that to be the targets. It's just unrealistic. But again, I like to see, I always use this basic formula. If you got a strong stock, you're going to get a PBC zone breakout. This is not the PBC zone. This is actually the cycle cup. It's a higher high inside of a cycle-based cup. So what you're going to look for now is a PBC zone to form up here, and it may possibly print 200% out of that. Again, it could be pie in the sky based on how far it's come, but it's acting really well on that TM2 cycle pullback. So if in fact it did that, let's just say that PBC zone formed in that 130 area, that would be 230, 260 plus 130, 390, $400. You never know. Could very well do that. And the historical high is way back there at 900 again. Had a major split back there. Whether or not it has the fundamentals to take it there remains to be seen, but right now it's acting really well on the pullback from a TM2 cycle. Basically, it's pinning right at that $100 psychological price point right now. This is on Tuesday afternoon. Let's just see how it acts the next couple of days. If you want to try to be safer on the entry, you can always use the scale in entry. Take a breakout of a 5-day high for part 1, 3-part entry, and then breakout of a 10 bar high That should be probably both of these. 5, yeah. You're going to be probably right there in a 10 bar high, and then a 25 bar high. So you basically be scaling in like right here, right here, right here. So not overcommitting before we know for sure whether it's going to take out that trend line. But overall, just excellent pattern quality on this advance coming out of that TM-3 cycle off of the IPOs. Look at the weekly on that. You can see here in the base, just really, really good on that cycle breakout. Lows on that about 150 or so. So that part I don't like because of the fact, you know, with that split, you're basically in the penny land. So that generally puts a damper on a price advance with all the basement supply coming in. So overall, still looks great on the pullback into the $100 psychological price point, and should continue up. But you know, it's a tough market, so just be cautious. Scaling it would be the best way to do it. Again, WGS GeneDX Holdings Corp. If you're interested in our trading style and want to join the club or get one-on-one coaching, head over to cycletradingtraining.com. Hope you enjoyed the video. Take care.